The big banks have got together in a show of force, almost getting towards those proportions of shock and awe, really acting because Eurozone leaders have really had no luck whatsoever in encouraging the International Monetary Fund to help them kickstart their own rescue bailout fund. So what they're doing is essentially pumping a whole lot more money, potentially tens of billions of dollars into the global economy to make it easier for banks to lend between each other. And this is to fend off fears of a potential credit squeeze, as we saw back in 2008 and 2009, when there was so much fear and suspicion that banks were simply too scared to lend to each other. And as we know, money makes the world go round, but unless money is pushed around efficiently, the world stops. And you can assume that's what central banks are really worried about, given the deteriorating situation in Europe.
Now, the action was clearly good news on global markets. Will that optimism last, and will that spread of liquidity actually move beyond Europe and to other countries that are still feeling the effects of the debt crisis there in Europe?
Well, it's pretty much one day at a time at the moment, but most economists believe this has to be much more than a one-day wonder. It really has to kickstart real negotiations, particularly to pressure Germany to encourage or allow the European Central Bank to start buying bonds to become a lender of last resort, particularly to prop up those European banks, particularly those in France that are really on the brink, some of them, of being hit or going close to insolvency because of the lingering debt crisis. So yes, this has to go beyond just one day's action, but certainly it is being viewed positively by markets. And as you say, markets in Paris and Frankfurt up 4.5%, Germany I think just about 5%, and also Wall Street much higher, closing 4.2%. So that really extends the biggest three-day global surge since 2009.
Well, the board of the Reserve Bank meets next week, Peter. So can we expect an emergency rate cut as a result of what we're seeing over in Europe and also with the bank in the United States?
Well, I think that what we've seen this morning, Virginia, really underscores the concern that central banks right around the world, from the US Federal Reserve down, have about the situation in Europe. And the Reserve Bank here in Australia has been on the record for for several months saying that they are deeply concerned about the storm clouds gathering over Europe. As we know, the Reserve Bank cut interest rates last month in November. The board meets again on Tuesday for its final meeting of the year. Expectations are growing that they might cut interest rates by 1/4 percentage point, but if not, they might be holding fire for next year. And certainly Westpac, which has been leading the debate on interest rate cuts, is tipping 3 more interest rate cuts in 2012, possibly taking the cash rate to 3.75% by the end of 2012.